We'll work out the next comprehensive question of NPO, that is illustration number 32, page number 1.47. So again you are asked to do income expenditure and the balance sheet. Additional information is there. We will read the additional information first. Subscription received in advance, that is 2018 and 2019, that is opening and closing figures. We are doing for 2019. Okay, so subscription is having adjustment, you put a tick mark again subscription. Then outstanding subscription, again subscription is having adjustment, then books value is given opening and closing figures. That means you have to take in the opening and closing balance sheets. Yes, only that is the additional information given, but in this question certain items are there inside the receipts and payments, so we will be discussing that. So we will do income expenditure now. Draw the format. The receipt side, the first one is the opening balance, that is 17,000 given. So opening balance will be recorded in the opening balance sheet. Then we have subscription of rupees 60,000. With that we have to consider those adjustments. So subscription, we will write that 60 in the inner column. There is chance for you to make mistake while you record subscription. Accidentally you might record it on the expenditure side, because in your receipts and payments account it is written on the debit side. So automatically you will write it on the debit side. So you might make careless mistakes like that. Be very careful. You have to write it to the opposite side, because incomes are being on the written on the credit side. 60,000, with that received in advance. That means last year you have received in advance 4,000, which is for this year, which we will add now. So received in advance, that is last year we received, so 4,000 we have to add. Then received in advance on 2019, that means it's for the next year, which we have to less. The amount is 5,000. Then you don't have to draw a line here, we will write the figure at last. Then outstanding subscription, that is last year outstanding subscription 3,000, which we will less 2018. So that we have to less the amount as 3,000. Then this year's outstanding is there, which is 4,000, which we have to add. All those figures when I write you will find it very easy, but please do it yourself, try it once, so that you will be getting confused between all these figures. So you have to think, take a moment to think whether it relates to current year you add or else you less it, exclude it. Outstanding subscription, this year's we will add. That is 4,000. So the outer column figure will be 60,000. The next item there is donation. Nothing is mentioned, so it is general donation, which you can write here. Donation of 2,000. Then we have furniture. Okay, we know that furniture is fixed asset which will not come in income expenditure, that is capital in nature, but within brackets they have written something. The book value of the furniture was 6,000. Outer column one value is given 5,000. Nothing is mentioned what is that 5,000. The meaning is the asset worth, the furniture worth 6,000 was sold for rupees 5,000. That is the meaning, because usually book value will be written in the books. So 6,000 must come here, but 6,000 is written within brackets and they have written 5,000 in the outer column. So 5,000 is the received amount. Only then receipt side will be having all these items. The received amount will be appearing on the receipt side. So 5,000 is the received amount. How we got this amount? So we would have sold this furniture. So the meaning is furniture worth 6,000 sold for rupees 5,000. Okay. Now furniture we cannot take in income expenditure because it is capital in nature, but that profit or loss on sale, it is there in the income expenditure format also. The profit or loss on sale of fixed assets we have to include in income and expenditure. That profit or loss is revenue in nature. In revenue means not income, the recurring in nature. Okay. So here book value 6,000 sold for 5,000, there is a loss actually, and loss must be written on the expenditure side, not on income side. So you must write that loss on sale of furniture. Other than that, we will not be recording any sale or purchase in income expenditure, but this loss amount, that is 6,000 minus 5,000, this loss amount we have to consider here. Then the next is interest on investment at the rate of 5%. The amount is given 9,000 and it is for full year. The amount is directly computed, so you just have to write it now on the income side. Interest on investment or incomes on investments, that is recurring in nature. So interest on investment 9,000. Then on the payment side we have salary. Do we have any adjustment for that? No, only subscription is having adjustment. Okay. So here we will record to expenditure side, we have to write this to salary 30,000. Then we have rent 18,300. Repairs 4,700. Then books is given there 16,000. So books means that's the additional books we purchase during the year, which we will not take in income expenditure, that is capital in nature. So exclude that. Building also we will not include, that is again capital in nature. Then closing balance will go to the closing balance sheet. Okay, that is over. Then adjustments also you have to read. Adjustments, now we have subscription that you considered already, then you have books value. Okay, we know that the opening value of books will go to opening balance sheet, closing value will go to the closing balance sheet. Now we will just check one thing. See, the book's opening value is 12,500, isn't it? Normally, how will you record this value in the balance sheet? This value will be recorded in the opening balance sheet. Now, when you start the closing balance sheet, what will be the value of books? Here it is directly given, or else how will you compute the books value? You will write opening value of books first, isn't it? You will write books, the opening value first, then you will write additional purchases during the year. What you purchased during the year, the books worth rupees 16,000, which we will add, and what will be the figure? So that your figure will be, here it is 28,500, isn't it? This is how usually we are computing the closing value of books. But here in this question, the closing value is directly given. The book's closing value, did you see? 26,500 is given. Actually, what we are supposed to get is 28,500. But what they have given as closing is 26,500. What is the meaning of that reduction? Why there is a decrease in value of that asset? That is due to depreciation. So what you have to write is 28,500 less depreciation. The depreciation amount is the difference between these two figures. Did you understand? The difference between 28,500 and 26,500. So that is called the depreciation amount, and that depreciation you have to less. Clear? So in these questions, in these type of questions where you have the closing figure directly, normally you will write the opening figure, then add the purchases, you will write the closing. But here closing figure is directly given, so always you have to check whether there is a decrease like this, whether there is a difference like this. If there is a difference like this, that means it is the depreciation. It is the depreciation amount, and that depreciation must be recorded on the expenditure side of income expenditure. So if you don't check this one, 2000 you will not write in income expenditure, so from there onwards problem will go wrong. Understood? Surplus will get wrong, then balance sheet also will go wrong. So you have to check like this. When, if the closing value of asset is specifically given, you have to check whether it is correct, whether there is any difference. If there is difference, you take it as depreciation. Understood? So this 2000 now we will write on the expenditure side. To depreciation on books, the amount is 2000. Yes, with that your question will get over. Now we can compute the balancing figure, either a surplus or a deficit you will be getting. So here we are getting a surplus. If it is deficit from capital fund, you have to less deficit. In certain questions you have deficit also. So to surplus 15,000. Then you write the totals. So every question you must write the totals also. Now we have to see whether opening balance sheet is to be prepared. In this question, opening capital is not given directly, so we will have to do the opening balance sheet. So write balance sheet as at, and here the opening date or the last year's date is 31st March 2018. And how will you start this? You have to look into the receipts and payments account. And receipt side we have the opening cash balance that we will write first. Cash of 17,000. Then all those items which we excluded before we have to consider, and if it is opening figure, it must come in the opening balance sheet. In previous questions, we were not having any item other than the opening cash balance, but always you have to go through each and every item that we excluded from income expenditure, because all those excluded items are capital in nature, and all those capital items must come in the balance sheet. And if it relates to the opening balance sheet, you must record it here. So we will just go through the items that we excluded. First item that we excluded, the opening balance we wrote, then furniture we had excluded. Normally it will be written only in the closing balance sheet, but in this question there is a difference. Furniture book value 6,000 and we sold during the year for rupees 5,000. So in the closing balance sheet, will you be having furniture? No, because during the year you have sold this particular asset. So there won't be any furniture in the closing balance sheet, but in the opening balance sheet you must have this. And what will be the value of furniture? That book value of 6,000. 5,000 is the sale value. You have to take the book value always in the balance sheet. So that 6,000 we will record it in the opening balance sheet. Understood? So always every question what you have to do is those excluded items, capital items, you have to see, and if it belongs to the opening balance sheet, you must record it here. Okay, previous questions why we didn't write? Because all those items were related to the closing figures only, closing date only. Then life membership fees given for rupees 7,000 that we had excluded. Life membership fee, why we excluded? Because that is capital in nature, that is one time payment. So that is capital, we excluded from income expenditure, but should we write it in the opening balance sheet? No, because that they paid or we received it only during the year. Okay, so that will come only in the closing balance sheet. Furniture, why we recorded it here? Because during the year we sold it. So only the opening furniture we will be having. Then interest on investment. Interest we have recorded on income, but this investment is an asset for you, isn't it? Investment is an asset for you. And now what is the value of investment? How will you compute the value of investment? It is given the interest rate in the question. Interest rate is given like 5%. When you computed 5% on X, what is the interest you got? The interest amount is 9,000. So what will be X value? That will be 9,000 into 100 by 5. The amount what we invested is 1,80,000. This is the investment value. And it is written within brackets. It is for full year. That means investments were there from the beginning of the year. This must come in the opening balance sheet. So in this question there is difference. Normally items will come only in the closing balance sheet, but here specifically they are giving some additional information. I mean hints they are giving within brackets. So interest you don't have to write here, but the investments, the invested amount means it's an asset. It must come in the balance sheet. Why we recorded it in the opening balance sheet? Because it's written within brackets. It's for full year. So from the beginning onwards you have this. And did we sell investments during the year? No, we didn't sell any investments. So the same value will appear in the closing balance sheet also. Understood? So this is how we have to compute that investments figure. Because X, the invested amount is not directly given. So we computed 5% on X. That's how we got that 9,000. It's directly given, no, 9,000. So just do cross multiplication. Now the next item on the payment side, the excluded items only you need to consider. The books we have to consider. The depreciation, will you write it here? No, that is only at the end of the year. Whereas the opening value of books you have to write, which is 12,500. This calculation you can write after your balance sheet as a working note, you can show. Books 12,500. Then we have building. Building, do we have any opening value? No. Building given on the payment side means during the year we purchased, but that will not appear in the opening balance sheet. And for building there is no opening value, so you don't have to consider that. Furniture we wrote. Then we will read the adjustments. Subscription received in advance, that means 2018 you have received in advance. No, that is amount of 4,000, that's there in the opening, and that will come in the opening balance sheet. That 2018 figures will come here. Received in advance means liability, so it will come here on the liability side. 2018 figures you just take and write. Then you have subscription outstanding of 3,000, that is also opening figure, 2018 figure. So write here outstanding subscription 3,000. Then books figure already we recorded the opening figure of books. Yes. So these are the items which will appear in the opening balance sheet. Now it's over. You just find the balancing figure. Balancing figure is 2,14,500, which is the capital fund. The balancing figure, this is the opening value. Write the totals and you can close your opening balance sheet. Now we will start the closing balance sheet. Balance sheet as at 31st March 2019. Closing balance sheet, for that again we have to look into the receipts and payments account. The opening cash balance already we recorded. Then again you look into the excluded items. Furniture, we recorded the opening value. Since we sold during the year, we will not be having closing value for furniture. Otherwise, you should write that furniture 6,000 again in the closing balance sheet. Now, life membership fee we had excluded, isn't it? So, that life membership fee of 7,000, now we have to take in the closing balance sheet. On which side? It is on the liability side, just like a fund, just like legacy donation, which we wrote in the previous question. So, life membership fee on the liability side, that is rupees 7,000. All these kind of funds will come on the liability side. Understood? Because we have to make use of all these, and that is capital in nature. So, it will appear on the liability side. Then in your answer, they have added it with capital fund. They have written like capital fund, add surplus. Then with that they have added this life membership fee also, because that is capital in nature. So, they have added it with the capital fund. You can either add it with the capital fund or show it as separate item on the liability side. Then what next we have? Investments we have, isn't it? Interest we can't write because that is income, not an asset, but investments is an asset. We have already recorded it in the opening. Same thing will appear in the closing also, since we didn't sell any investments. So, investments 1,80,000. Then on your payment side, what we excluded is books. Okay, so that we have to write now. Books already we discussed how to write, isn't it? The opening value we will write, that is 12,500. Then purchases, add purchases. During the year what we purchased you have to add, which is given on the payment side, books of 16,000. So, now it became 28,500, but the value is given as 26,500 because there is depreciation of 2,000. So, all these we discussed already. Then we excluded building from payment side, so that we have to write now, and buildings there is no opening value. So, you just write this value that we purchased during the year 30,000. Then what we excluded, the last item is, don't forget to write that cash balance. Cash balance also we have excluded, it is 1,000. Now we can look into the adjustments. The 2019 figures are given no separately, you just write that. It is subscription received in advance 9,000, that is a liability, sorry 5,000 only. 5,000. Then outstanding subscription, that is this year's 2019 figure is given separately, 4,000. So, once you finish your receipts payments, you have to go through adjustments. Books figure we already recorded. Is the balance sheet over? Just add your liabilities and assets. It will not tally. You haven't written one main item on the liability side, that is, see accidentally I left space there, you don't have to leave space. You have to write one item, that is capital fund. Take the opening value 2,14,500. With that you can add surplus. The surplus figure is 15,000. So, that outer column you can write 2,29,500. In your textbook they have added that life membership fee also here. That is also correct. Okay. With that, yes, all items are over. So, you have to remember this, capital fund must be written on the liability side. Why we prepared the opening balance sheet? To get the figure, to get this figure. Or else you do one thing, in case if you are forgetting this, so to avoid such situations you write capital fund in the beginning itself. When you start the closing balance sheet, that time itself you write capital fund in the beginning, okay, so that you won't forget this item. Yes, rest all items we recorded. Yes. So, now the balance sheet will tally. So, if you move in that order, automatically your balance sheet will tally. You will not miss out any item. So now the closing balance sheet also got over. Okay. So here the new item what we discussed is that books depreciation. It is not specifically written as depreciation, but there is implied adjustment for depreciation. Illustration 31 you must do in your notebook. I am not doing it because 32 and 31 almost all transactions are similar. So you work out 31 also. I will just explain the new item there. Okay, look into the payment side of illustration 31. Investments, did you see on the payment side 80,000, second last item. Then first adjustment is related to that. Investments were made on 1st October. That means will you write investments in the opening balance sheet like in this question? No, because investments were done only on October 1st. During the year only we did. So we can't write it in the opening balance sheet. Only in the closing balance sheet we will be writing. Then earning interest at the rate of 5%. So you have to compute 5% on 80,000. Consider the time period also, because we invested only on 1st of October. So you have to start counting from October, November, December, January, February, March. So for 6 months you have to calculate the interest. So here the interest they have computed like 2,000. Understood? So that is termed as accrued interest, because on the receipt side, did you see one bank interest there? There is a bank interest of 2,000, and we know that receipt side will be always having the received figure, received item. So already you received 2,000, and the adjustment says that you are earning interest at the rate of 5% per annum, and when you computed that 5% for 6 months, you just look into the solution. They have computed the interest amount as 2,000, and that is written as accrued. What is given on the receipt side is received amount. This is the accrued interest which we have to add. When you write on the income side, you have to write by bank interest 2,000, then add this receivable also, accrued interest also we have to add with that. The 2,000 also we have to add. Okay. Then this 2,000 again will appear on the asset side, because accrued interest are assets, whereas that bank interest of 2,000, is it an asset for you? No, because received item is just income. Receivable items are assets. So bank interest we received, that will appear only on income side, whereas accrued interest, it's an adjustment now, it should be recorded 2 times. You have to add it with that bank interest first on the income side, then it will come on the asset side also of the closing balance sheet. Why? Because it is receivable amount. When you write investments, with that you have to add accrued interest in the closing balance sheet. Okay, that is only the new item there. Rest all items are similar to illustration 32. So you must do that also, work out that question, illustration 31.